Hello and welcome to Mint Funds Update. My name is Marek Krzeczkowski and I will talk about our outlook and what happened within diversified funds last month. We are still optimistic, but I think there are a couple of things I would like to discuss regarding President Trump and some things that markets might be missing. Now, what we definitely see is that the trade war is fading. Tariff tensions have already peaked. Wide-scale exemptions on both sides are being rolled out. We've already seen a deal with the UK. We are now, as we record this, witnessing negotiations with China and the US. But really, what becomes obvious is that those reciprocal tariffs we feared so much last month are essentially dead on arrival. Now, the main reason that is the case are the constraints that Trump has when it comes to his ability to do things that he wants to do. Just remember that when he was elected, trade policy was just one of many things he was promising to sort. Now, crucially, within the next 2 years, we have a midterm election in the US. Trump has a lot to do over the next few years. However, if US economy falls into a recession, that means that his agenda will be derailed. So whatever happens from here, they need to avoid recession. And now, as you saw last month when markets sold off, and then once that happened, Trump administration has literally walked away from sort of aggressive tone, and markets recovered. I believe that within the next 3 months, the trade war will be behind us. Now, the other thing that happened last month was really looking at how sentiment shifted to extreme lows. The pessimism was hitting historical highs, and that often is a sign of markets bottoming up. It wasn't really a surprise after we saw tariffs which were calculated with a very bogus formula, but now we are seeing that this has passed. Now, underlying fundamentals in terms of US economy are strong. There is no evidence of corporate solvency crisis. US labor market continues to be strong, and it is supported by consumer demand and corporate revenues. And finally, we see powerful structural tailwinds going into second half of this year. Beyond tariffs, markets are already looking through to tax cuts and ongoing AI revolution that we see across different industries. We see AI being adopted. So AI is definitely on cards and will continue as a strong boost to the economy over the next 6 months. Lower energy prices, as oil prices are now around $60, softer US dollar, and most important, Fed rate cuts in the second half of 2025. When Fed Chair Powell was speaking, he emphasized that the biggest risk to the policy is inflation. And inflation because of tariffs. If tariffs are rolled back, that means that Fed will have a way to cut rates and support the economy if we see any weakness in growth over the coming months. So overall, we are optimistic on the equity markets, and we believe that the second half should bring recovery, rate cuts, and the ease of tariff war. Now, just to give you a quick overview of what I've just discussed, here on the left-hand side is Trump net favorability rating. As you can see, has slid down. This is what Trump is really worried about. That that rating means also that the risk of midterm elections in 2 years increases when that is low. So obviously they are worried about this. But also on the right-hand side, is US economy in distress? No, this is actually showing jobless claims and payrolls, and they are still in a very healthy levels. Moving on to funds, Within diversified income fund, had a positive return. Asset class performance mostly negative in April, as markets grappled with US tariffs. However, positive bond returns offset modest equity weakness. Fixed income delivered a healthy 0.5% contribution, while global equities and Australian equities detracted 0.1 and 0.2% respectively. Positive contributors in Australasian equities, Megaport led the gains, contributing 0.1% after outperforming on robust demand for its cloud connectivity services. Telix Pharmaceutical added 0.1%, as its radiopharmaceutical pipeline advanced with encouraging clinical data, lifting the stock up 2%. In global equities, Netflix was a strong performer. It contributed 0.1% on continued subscriber growth and stronger Q1 guidance, while SRG Global and Goodman Group had a strong performance on solid operational updates. In terms of negative contributions, within domestic equities, Scale-Up Holdings was the largest drag, as shares fell 11% amid weaker industrial volumes. Serco cost us 5 basis points after reporting mixed results that sent the stock down 9%. Within global equities, weakness across the board. LVMH, Thermo Fisher, and Eon detracted the most, as all three delivered softer than expected trading updates. Growth fund was negative for a month, minus 0.6%. Similar to income fund, asset class performance was mixed in April, with positive bond returns and negative equity performance. Fixed income had a slight positive contribution of 0.1, with global equities and Australian equities contributing minus 0.4 and minus 0.3. Positive contributors within global equities, Netflix and Mercado Libre performed strongly in April. Netflix surge jumps after delivering a Q1 revenue beat and rising guidance, while Mercado Libre rallied on 24% surge in Q1 net profit. In Australian equities, Megaport again was strong, supported by robust demand for digital infrastructure. In addition, underweight in Auckland International Airport cushioned returns after the stock fell 8% on softer passenger traffic. We don't actually hold that stock in Auckland International Airport in the portfolio, so that is obviously on the relative basis. Negative contribution within global equities, Thermo Fisher was down 14% and Logitech International was down 16%. They were the worst performing stocks. Thermo Fisher retreated after management flagged potential headwinds in lab equipment, and Logitech lagged amid sign of slowing PC demand, accessories demand, and concerns around US tariffs. Within domestic equities, Scale-Up Holdings again was the worst performer, pressured by weaker industrial volumes. Thank you for listening. If you have any questions, please send them to info@mintasset.co.nz. Thank you.